Good morning, ladies and gentlemen. Hello, everyone, and welcome to today's session, Digital Divergence and Exponential Change. I'd like to welcome today's speakers. We are honored having them with us. Thank you very much for joining us. Mr. Ala Ajwa, Global Account Manager, Financial Services Industry, Microsoft. Mr. Banish Babu, CEO Intellect. Mr. Iyad Badar, Regional Technical Manager of Gulf for Dell EMC, Dell Technologies. Mr. Michael Knotten, Head of Analytics and Big Data for Oracle Europe, Middle East and Africa. Mr. Cyril Anand, Director Strategic Accounts, Ooredoo. And Ms. Shahzeen Baluch, Partner Financial Services, Technology Consulting, Ernst & Young. Thank you very much for joining. And today's webinar covers key digital topics. The first will be disruptive technologies and its impact on business and society. And the second will be a value proposition of digital platform and harnessing for business growth. The third is connected finance, business transformation in the financial industry. Fourth, power of business intelligence and analytics. Fifth is building business process with customer in the center. And the sixth is leading digital disruption and the need to build agility at workplace. For those of you joining us just now, welcome. The webinar is online, broadcasted and recorded. A version of this webinar will be available in Doha Bank website. Thank you again. And now call on Dr. Sitaraman, Doha Bank CEO.
Thank you, Colin. What a combination of speakers. What a joy to be an integral part of this interesting and exciting webinar. Ladies and gentlemen, distinguished guests, dear friends, we live in a changing world. Extraordinary set of changes and challenges are happening. As we speak, we have gone through this COVID-19 with a stake of 28.8 million people. tested positive, and we lost nearly 922,000 people. By no means, this is an ordinary crisis. World at large is in the crossroads. We are in a defining moment for us to transform and translate to be more productive, positive, constructive, and value-driven. The risk are of four types: the economic risk, environmental risk, human risk, and social risk. These are four major pillars of risk which needs absolute mapping for us to see through. We come out of this crisis, save the humanity, human dignity, human prosperity. That's the crossroad. How do we do it? What sort of challenges and governance we need to principally adopt with the changing dynamics? That's the focus. In terms of economic governance, there's a huge convergence among the politicians and economists, technocrats, to principally adopt in the improvement of liquidity, enhancing the debt servicing capacity of individual and institutions, ensuring the disaster recovery turns into business continuity. Measures have been taken. Over $25 trillion have been pumped across the globe, and 94 countries are at stake. Social governance, we have seen the reflection. We have maintained right kind of discipline. We have to save ourselves. And social distancing has been the norm. Hygiene has been factored, and countries are coming to new norms. When it comes to environment, possibly, this is an opportunity to create lesser carbon society, carbon neutral society. Perhaps the carbon emission we have seen in the last 6 months have been exemplary to see we have to come to terms with the changing energy mix, and we have to find pure collaborative model for us to see through this crisis and convert this crisis into an opportunity. Human risk, everyone is engaged in, making sure we test the maximum, we give the best of health care, and protect our dignity. Qatar itself has tested, as we speak, 691,000 people. We lost nearly 205 people. By no means, it is an ordinary accomplishment. The healthcare system has worked. The governance has worked. The framework has worked. We have to now think deeper and see whether we can create better sustainable value chain. And that's the very purpose of it. In the whole space of this pandemic, the Great Recession was pronounced, but a distinct, mind-boggling experience in terms of innovation. And with the changing dynamics, human endeavors to change ourselves, our attitude to redefine ourselves, has been an exemplary characteristics. And that's going to be positive. That's going to be productive in building food security, in ensuring we eliminate extreme poverty. We're bringing gender equality. We are ensuring universal education. We are going to ensure we are reducing the carbon emission, as I say. We have to also digitize. With the changing pace of the world, the bureaucracy has to be minimized, and we bring in value-driven integration to see through extraordinary set of changes to minimize the disruptions. Commercial disputes are minimized, and everything is through digital innovations, we create peace, and institutions is meant for truth for action. This is the kind of change. This is the kind of challenge we are imposed in. Perhaps we have to interpret in positive terms. This is going to bring in more value-driven exercise. That's on the economic front. On the technology front, I'm going to showcase some of the mind-boggling changes which are happening and which are akin to the concept from the line of speakers who are assembled here. Now, let me start with the projection of the global economics. Economic terms, we are supposed to converge around 4.9% contraction. That's what IMF says. OECD has got a different prediction of 6.2%. Advanced economies are grossly underperforming, and we are going to have nearly 8% contraction in the advanced economies and nearly 3.9% contraction in the emerging markets, so-called developing economies. Qatar itself is going to go through a contraction between 5 to 7%. We are going to bounce back once we get the clinical solution, medical solutions fully administered to the entire planet. Perhaps we can have a sigh of relief. We can bounce back in terms of politics and economics. So as I said, we have a bigger challenge, but we need to go through it. How Qatar is facing, Qatar economy is administering these challenges into effective actions and governance is meaningful. I've given the numbers in terms of healthcare, but we also have huge opportunity in Qatar economics. I can tell you very clearly, central bank has taken enormous measures. The fiscal and monetary prudence, alignment between the fiscal policy and monetary policy, with the pronouncement of His Highness Emir's $20.5 billion, that is equivalent to $75 billion, 75 billion Qatari riyals, has been quite productive in channelizing for improving the liquidity. The liquidity crisis should not move into a funding crisis. Funding should not move into a solvency issue. And that's the very purpose of it. Interest rates have been lowered right from Federal Reserve. A synchronized interest rate reduction in an environment where inflation is at stake. Definitely, we are getting into disinflation in certain pockets. That's temporary. There's no question of interest rate hike for the coming few years, perhaps. It remains to be seen. That's the level of conviction. Financial services, including Doha Bank and rest of the financial services, shown enough resilience and financial stability. And on the hydrocarbon side, we are going to move as planned from 77 million metric ton to 110 by 2025 and 127 million metric ton. We're going to have FIFA World Cup as scheduled. An enormous amount of commitment for sustainable value chain has been showcased by the Supreme Committee for Delivery and Legacy. We are seeing the reflection in terms of airport, seaport, road, rail. The non-hydrocarbon growth has been prolific. Hamad International Airport has set in the right kind of standards to enrich human safety. We have a meaningful business climate getting evolved. We're improving the competitive offering in terms of free zones. We are looking for investments, including fintech, healthcare. Well, financial center has been responding to the challenge in terms of sports or digital or financial or media segments. We also have a law re-regulating the investments for non-Qatari capital. That's a good move. The idea is to open up for investments. And again, the real estate law has been redefined. Qatar property law for foreigners, there are designated locations have been cleared. We have also seen the public-private partnership. The key for the entire investment program is to make sure we build a public-private partnership. And that's important. We learned self-reliance after blockade, and Qatar's commitment to food security has been profound. We have reached self-reliance in most of the dimensions. We also have changing dynamics in terms of technology. Let us interpret the global prospects. What is likely to come? Perhaps all of you know the changing dynamics. The first industrial revolution was cotton spinning and locomotive. The second was confined to mass assembly and electrification. And the third one was confined to PCs and mainframe. The fourth one is the new one, which we are witnessing in terms of social media, artificial intelligence, blockchain, robotic process, automation, name it. There are enough tools for us to transform application programming interface. You have open banking in terms of financial services. We have digital and sustainable value chain created for financial services. The collaborative models are going to redefine the game. The technology companies are coming together and becoming a bank as well. In the coming days, it will be difficult to distinguish between a technology company and a bank. And that's real. And again, how do you transform? How do you redefine your business model? How do you make sure you have sustainable value chain created? And that's the purpose of the session. Watch a few of my clips, which will run for 5 to 7 minutes. Then I will hand it over to the rest of the speakers. The fourth industrial revolution is mind-boggling. We have to look at the state of the world from today, from now on. The interplay, how it is going to change the state of the world. That's a big question. Next is the digital disruptions. Industries are getting redefined. We have seen health is reimagined. Future of work is changing. Resourceful planet. We have seen the reflection in terms of resources. Everything is smart. And we have seen the behavioral revolutions. Urban world is concretized. Empowerment of customer happening as we speak. Disruption in terms of every single business model. Health transformation. Robotics and artificial intelligence. And if you look at the global economics, over 60% of the incremental economic productivity come from Asia. And Asia contributing to urbanization. Automation and globalization affect the work. That's what we need to understand. The behavioral economics, so-called, and the climate change impact our life. There's no question. Empowering every individual. Individuals are becoming institutions. That's the lesson. Let's watch the next clip. That's a digital reflection for you. Now, what we need to understand is how we're going to use the platform. How do we bring in all the stakeholders, customers, shareholders, partners, employees, bringing them together and making sure we have value chain creation. And that's the key. And that's the message we want to give it, whether Amazon or Alibaba, Google or Apple, they all have done it. And that's why they're exponential in terms of substance. And that's why we have to recognize this change is real. We have to accept and adopt. The digital platforms plays a role. Watch this play.
Many markets rest on a platform. These platforms, such as smartphone operating systems or music streaming services, connect customers to a wide range of complementary products like apps or songs. A great ecosystem of complements attracts more customers. So even though some complements in the ecosystem are competing against each other, they also need each other. Traditionally, production is organized through hierarchies or markets. A platform ecosystem is a hybrid organizational form that is neither market nor hierarchy. Platforms and complements agree to co-specialization or exclusivity contracts. These agreements bind the parties into stickier, longer-term relationships than regular market contracts, and the platform coordinates and governs the overall ecosystem.
That governs the ecosystems. The platform governs the ecosystems. If it comes to a financial service industry, we have to connect the finance. The objective is to connect the people and the groups. One classic example is Australian Stock Exchange. I thought it's appropriate to bring it across. That's a beauty. It's an example how we can collaborate and connect people and groups, all the stakeholders, aggregation of services, integration of stocks, mutual funds, banking, insurance. That's going to happen. One single pocket. Customer is going to dial in and he has to be empowered to choose what he wants. He has to be given omni-channels and he has to be empowered in total respects for his convenience. And that's what the convergence is all about. When it comes to QATAR, we are also evolving in terms of fintech. QDB is working on it. And essentially,
QATAR, with its drive for innovation and knowledge and zeal to change the world for good, is uniquely positioned to lead in the world of fintech. We are launching the QATAR's FinTech Incubator and Accelerator program to be the hub of the best of global fintech and support them with unparalleled access to the local and global market, leading global mentors, financial support, and more. These innovators will address the most pressing global, social, and financial service challenges, while enabling QATAR's vision and national initiatives, such as cashless society, QATAR's smart city, and QATAR National Vision 2030. Are you a fintech on a mission to transform the world? Join us in changing the world of fintech.
Qatar Central Bank Governor, His Excellency Sheikh Abdullah bin Saud Al Thani, has been very upbeat about it. He has been instituting as a culture now within the banking fraternity by the partnership of Qatar Development Bank. So that is what exactly the change. Now, navigating this.
Let me spend the next couple of minutes on the financial technology. As a short show, at Qatar Central Bank, we will be looking at the financial technology through classification of financial technology by primary economic function and how it helps us. As the chart shows, financial technology credit globally is still small. However, the lack of good quality data from the MENA country make it difficult to make any clear analysis at this point. There are, however, indications that this number is growing fast, especially in the development country. Why is that? I can suggest several reasons for this. If you look at this chart, we find that China financial technology has taken over consumer and business lending, while in the US, it is mainly focused in the consumer lending. On the other hand, in the UK, it is a mix of business, consumer, and real estate. This is quite a nice mix and show that companies and individuals have recognized the benefit of the financial technology. This is, however, not the case in the MENA region, and unless there is a big change in the culture, it might not take off on a large scale.
So what you need is the cultural change. That's what he exhibit. Now let me come to the final part of it, digital disruptions. We have to change. We have to change. If you ask me as a banker, what I've done to our institution is to recognize there's an absolute need for transformation. Transformation in terms of restructuring of your debt, as I mentioned earlier. Debt servicing capacity has to be improved in the changing times when there's a business disruption. It's a paralysis in substance. So you have to help the businessman to make him move. Again, we have to look at rationalizations. Now, the world is moving from circular to flat. So you have to necessarily find opportunities in recognizing it's a huge amount of rationalization is possible in terms of operating costs, administrative costs, staff costs, or otherwise. You can get the best of intellectual property anywhere from the world. You're not location-centric anymore. You're information-centric. And again, we have opportunities in terms of revenue enhancement if you collaborate for the reasons which I mentioned. And we have bigger opportunity in terms of the overall integration of the transformation. And that's what exactly the next slide is all about. So that's navigation of the digital disruption. That's the essence of my concept note. Now, let me have the pleasure of inviting Mr. Ala Ajwa, Global Account Manager from Microsoft, to give his diction. Over to you, Sala. Thank you for joining us.
Dr. Sita, thank you for having me. I think there are a lot of similarities between what you have presented and what I'm about to discuss with you guys today. And hopefully I'll be able to address some of the questions and probably a way to resolve some of the challenges that we all face together as we move forward to a fourth industrial revolution, as you've mentioned. I want to talk about the disruptive technologies that are emerging today and will continue to emerge, and their impact on both society and business. I believe there are two types of disruptive technologies out there. There are the ones that deal directly with the social problems of underdeveloped societies in the world, and the other that is focused more on the improvement of developed societies. The first one usually have little to no negative impacts because usually you're dealing with a green field. If you talk about these societies, basic things that we take for granted, like access to clean water or sanitization or housing or energy are usually not there. So the innovation in that area, whatever you can do, usually improves the living conditions of these societies and emerge them into the larger economic cycle of the world. The other one that deals with the improvement of existing developed societies usually have negative impacts. Now, those negative impacts, they don't have to be huge in contrast to the positive. Sometimes the positive is 99%, but that 1% negative can slow things down dramatically. So in the first category, we're talking about the solutions that, for instance, address the issues and concerns of remote and disconnected urban societies. There are many of those around the world, as you guys are aware. You have in South America, in Africa, heavily dense and populated areas in Asia and so on. And they address a number of issues, right? So for example, how we can provide clean and renewable energy sources for these communities. The current model that we have is too expensive to implement, from the generation of electricity to the distribution to the billing of that electricity. Other innovation deals with sanitization. You've probably heard about the effort that the Bill and Melinda Gates Foundation are doing around toilets. It's probably a topic that nobody wants to deal with for the obvious reasons. But once again, the current waste management infrastructure that we have is way too expensive, right? From laying down the infrastructure, the pipes to the waste management facilities. Although you can have byproducts, fertilizers out of those, but still the cost is too high. And when you look at it, this is the #1 reason for disease, right? This is the leading cause of burdening healthcare systems in those societies, and unfortunately, probably loss of life. Another third example is how we can, provide affordable housing. Can 3D printing, provide affordable, secure, and safe housing in those communities? Now, all of the above relies heavily on the advancement in manufacturing and the development of new material. Whether it's in a practical term or in a theoretical term, we need to get more efficient. We need to get more cheaper. For example, when it comes to solar panels that are a viable renewable energy source in these communities. Can we get new development in the materials for 3D housing? Are we going to use concrete? Are we going to use plastic? Are we going to use a completely new material? So there's a huge heavy reliance here on the development of these new materials. And the negative impact, as you can see on the society, there isn't much that is actually affecting how things are going at this stage. So any kind of innovation here would actually help in the betterment of society. The second category of disruptive technology that addresses the society at large or developed societies, I believe there are many angles of how you can look at it and what it means for a developed society, from the positive impact that it creates opportunity, new lines of business, new supply chains, new jobs, and potentially a better way to live, right? So if you take into account how we can have improvement in diagnostic medicine and healthcare in general, to the negative implications that it may create, because you're cramping into an existing system that is working for some people, right? Maybe it contributes to an even more carbon footprint. Maybe it renders an entire business model obsolete by fundamentally changing the customer expectations. But before we do that, I think we need to understand that the technological innovation that is happening right now, it's happening in each and every industry. But it has created, you know, the positive impact to change people's priorities, to become a new way of doing things. Most of them are not. So what about those that actually do? How can we address the negative impact and move forward? We also need to understand that, you know, the disruptive technology, while it has a tremendous positive impact on society overall, those negative implications would slow things down dramatically and probably get it rejected where it could have improved a certain part of life that we have. We need to understand also that innovation is that we have in developed society is usually you know, a natural next step of a particular technology. When you take a look at cloud computing, it's been around for, you know, as long as computing has been around. If you signed up for a Hotmail account or a Yahoo or a Gmail account, you've been using a cloud email service. And the enterprise, you know, cloud services are basically a mainframe re-architectured in a different way, providing an even more advanced set of capabilities. Yet it has the potential to fundamentally change that business or an industry, because now you have access to a tremendous computing power that otherwise you would have had to invest literally hundreds of millions of dollars to have access to these capabilities. And it's infused with AI. So simply I can now just, you know, ingest not only terabytes of data, I can ingest petabytes of data and just deal with them as if I'm dealing with, you know, a simple couple of megabytes, get results pretty quickly, get prediction of what my customer wants, what do they like, what they don't like, how's their experience. And even in the consumer space, you would see that some, you know, maps applications kind of figured out on their own your favorite spots, you know, your home, your work, your friend's house, and it predicts what are you going to do next, and probably comes to you with your permission and suggests, you know what, today you probably should leave 15 minutes earlier because there's a congestion on the way. For a business, I think it also changes the relationship that we have with suppliers. You know, a traditional vendor-supplier kind of relationship no longer works. It was simply, you know, I order a bunch of products and then I can get them up and running, and that's about it. That is how far a relationship between a business or financial service institution and a supplier is. But like you mentioned, in a consumer space, you talked about, you know, the platform and how that platform becomes the governing body. I think the relationship between a business and the supplier becomes more into a partnership, because I rely so much on the capabilities that are being provided. I think we should together, you know, invest in probably joint engineering or joint innovation, or the creation of a new product. So it also affect how the relationship between suppliers and vendors are. Now, as you can see, the impact that we have here is connected in a sense that innovation triggers a ripple effect across all industries. For example, now I introduced automation at the branch, or automation at the retail check counter, or automation in diagnostic medicine. One of the negative implications is that I've never asked what's going to happen to those that are affected. What's going to happen to this segment of people that are affected. And it's not only that, I need that segment of people to help me leap forward with this automation piece, but I cannot neglect their, you know, their requirements. It could slow things down dramatically for us. The adoption of this technology or this capability usually lies within this segment of people. And the answer here is better education, how we can, you know, collectively elevate the level of education for these low-wage workers that can empower them to do much more meaningful work for the organization or for the society at large. can remote learning help? Since now, people have access to rich education material without being physically present in a certain location. I think that means that as an education institution, I have a much lower operational cost. I can, instead of having a lecture presented by a professor to 50 people, I can have it presented to 50 million people with the same level of effort that I had for these 50 people. That empowerment enables me to reach a much larger audience, probably reducing the cost for this training material. And yes, there will be a cost of IP that is related to it, but that also changes in a more advanced, let's say, set of technologies that are introduced. So talking about this, we also see, the discussion around education, how it changes, the intellectual property. How does the government ensure my rights? For example, when it comes to use of AI technologies with facial recognition, how does it govern my rights? How is my privacy and security concerned? And all these kind of negative implications, as you can see from around the world, governments could move forward and kind of ban the use of these technologies. So while we have huge advancements, while we have huge positive impact, these small negative implications must be addressed in order for us to move forward at a much faster pace. So in summary, I want us to walk out with 3 things in mind. I think advancement in manufacturing and development of new materials is a direct contributor to the betterment of societies. I think the positive impact created by disruptive technology in developed societies, always comes with a negative side effect that must be addressed together. And that technology tends to kind of trigger a ripple effect across different industries. So better coordination between key industries, government, and education is the true success to move things forward. And I believe you've also addressed that, how we in the state of Qatar are trying to have a more regulated relationship between the public and the private sector. Thank you.
Good. Well done, Ala. It's quite productive and useful information. I have only one question to ask you.
Absolutely.
Which sector in terms of business you see the major impact in terms of disruptive digital technology?
To be honest, we see those, because I am in the financial services. I see the biggest impact happening in financial services across the world, for the simple reason is that the kind of assets that we have to transfer are usually virtual, right? If you look at an airline, you have a huge set of assets that you also need to digitize, and there's a huge cost, and then you need to look, is this meaningful work to me or not? That much investment I need to digitize. But when you look in financial services, it's usually virtual assets that we have. Number 2, it also contributes to the entire economy, right? When we talk about underdeveloped societies, Dr. Sita, the cost of acquisition for a bank, for a person in that society is high. The cost of operating is very high. But when we introduce something like mobile wallets, that cost drops dramatically. And then I have empowered this person to use this money to create more value across all other industries. So I believe in financial services is one of the prime candidates for transformation moving forward.
If I ask you on the society side, leave the business. On the society side,
on society, I would think education is the number 1 benefactor.
Makes sense. Thank you. And there could be many more questions from the Facebook observers, and we will send you across. Perhaps if you have time later, we'll cut.
Absolutely, would love to.
Thank you. Thank you, Allah. Now let me move on to the next speaker, Mr. Manish Babu, CEO, Intellect, value proposition of digital platform and harnessing it for business growth. Manish.
Thank you, Doctor. Thank you. As I got up in the morning here in London, it was nice and sunny for a change. I think the climate change is definitely impacting everything, but so is the lockdown. While I think, as a one-line introduction to Intellect, for those of you who don't know, is servicing more than 100 countries for about 250 banks, and has been around for almost 3 decades. And for many of us who've been involved in technology, I've been actually working with Citibank. I used to run their technology and operations for all their countries outside of North America, which is about 80 million customers in 55 countries. And actually my involvement with Intellect goes back several decades. But what is interesting is that the change that we are seeing and the theme that we're talking about today on the exponential change is amazing. I think you saw some excellent statistics from Dr. Sitaraman. I just want to add a couple more, and this is sort of touching everybody's life. E-commerce, 10 years growth in 3 months. Remote learning up 120%. Zoom, 10 million subscribers to 200 million subscribers in 3 months. Subscription is a big business model. Usage of television up 43%. Usage of social media up 40%. Netflix in 5 months added 16 million subscribers. And Disney, which is a very old and respected company, actually, if you look at it, has doubled its subscribers, but started very late, only late last year, launched early this year, is already hit 50 million customers. So what does all this change, tell us? I think we all knew that technology is going to make a big difference in our lives. But what we're actually seeing now is that change will never be slower. And this has got to do with behaviors. And all of us who've been in financial services for long have been involved for many years in change, whether it is several decades back implementing ATMs that will change the behavior of customers on the way they get cash 24/7, 365 days, through to call centers, where you didn't want to go into the branches, you could call somebody 24/7, through to the .com time and everybody moving to the, doing the internet for their banking, to our famous mobile first approach started, by geniuses in design, Apple really to begin with. And I think the ability for customers to do everything on the phone is become an enormous change in the way they deal with clients. And now we have chat. How many of you over the last few months are doing everything on chat? And very soon we are seeing already several versions on our platform, both on the desktop as well as on the mobile, very aggressively moving to voice recognition. So the whole channel perspective on the devices side is significantly changed. Over the last few months, you're going to see lesser and lesser branch involvement. Many branches have been closed. Customers are doing things completely remotely. Operations teams in the banks and financial institutions around the world are delivering services to clients remotely. And I think this whole model of change, exponential change, is never really going to be slow, as I said before. Now, similarly, Intellect has been in this journey over almost 3 decades. I think we've seen the need for technology change, and many of us have been involved in this journey. And today we look back and say, hey, you know what? Maybe we've created the legacy that most of us see today. And most of us believe that legacy is one of the reasons why we are not digitally good. So I think I'm going to sort of touch on 5 themes that I think are very important if we really want to be digital. Some of these are technology themes, some of them are business themes, and some are operations themes. Because today, technology, operations, and business is really one. You cannot segregate and say technology is somebody else's job. So Intellect also over the years has changed significantly. And what we have today is 5 things that I'm seeing around the world as critical. Number 1, today we have financial services platforms and applications on the cloud. I think the cloud as an infrastructure compared to the traditional data centers gets scalability, cost efficiency, agility, and most importantly, has a much better grip on information security than many of our data centers do. So you have to have a pathway to define your technology solutions to be fully cloud ready or cloud native, as people would call it in a more technical term. The second important theme, I think, is to do with open architecture on the cloud. On the cloud, your architecture of your platform should be able to seamlessly connect to new channels. And guess what? The new channels are not only what I spoke about, it's also capabilities like voice recognition and all going forward. But most importantly, you need to connect to social media, you need to connect to e-commerce, you need to connect to telecom networks, anybody who's got customers in a very seamless way, because it's going to be critical in open architecture to do that. Many countries have mandated open banking. And I think open banking is primarily focused on doing the same. Open architecture for platforms to connect seamlessly to customers was the whole objective of opening up the market. And we're going to see more and more open banking implementations around the world. So are you really ready for open banking? The third thing is, over the last few years, we've seen a huge switch to customer experience. And today you have just about the whole platform, not one big monolithic one, but you have a platform that needs to be more customer journey driven. The customer user journeys today, you can configure and consume those journeys so that you can easily change things, modify things, implement things that customers need. The agility of the open architecture I talked about, along with the cloud, has to be supplemented by excellent customer user journeys, which are far more personalized than before. I mean, as we've seen the evolution of the move from the industrial age to the digital age to the information age, where are we really? Okay, the industrial age, traditionally, we used to be a B2C and a B2B business. The digital age is B and C. The information age that we are already in is actually C2B. The customer is going to come and consume services. You should be agile enough to provide those capabilities. And then we've often heard the term data is the super oil. Why do we say that? You know, clearly in a more sort of light vein, I would say, are you consuming more data today or are you consuming more oil? Okay, I think that'll answer the question. But the reality is that financial institutions have actually had the most amount of data. But this whole data equation is completely, blowing up in a sense that those who can use that data, and just like oil, you need to extract, you need to refine, and you need to be able to provide a refined solution where customers can consume. I think we've not used data as well as some of the companies that you're seeing in the quotation I gave you about some of the companies that have grown. They've used data very well. They've been cloud focused. They've been open architected. They've been customer journey driven. So I think it's important for us to keep in mind that our customer user journeys need to be supplemented by data. Now, what does that really mean? That means using data for greater contextual connections to customers, greater personalization, almost hyper personalization. And the future is going to be ecosystems and platforms that you need to connect to and provide customer services. So you'll actually have a whole range of new digital channels evolving as a result of that. So very important to focus on the customer journey. And the final, and the data, as I said earlier, the final piece that I think is going to be vital is the creation of these e-marketplaces. I think Dr. Sitharaman talked about the e-commerce and the social media, the creation of these huge platforms, these huge e-marketplaces. Your ability to connect customers to the e-marketplace is important. It's critical for you to go to a small business and enable him to sell digitally. Today, you're seeing huge implementations taking place in market after market because of COVID, where even the smallest of businesses is able to deliver to customers electronically. And there are platforms there to help you do that. And I think it's important that you as a financial institution are able to connect those platforms in such a way that you can provide your small businesses and your individual services like never before. COVID has actually resulted in significant pressure. There is credit risk pressure across the markets because of closure of many businesses. Managing credit risk with data efficiently is vital. Liquidity risk is, is a concern for many people. It's something that you have to learn to manage, and there are platforms. Both, of course, definitely Intellect has the whole suite of platforms, but there are platforms there to manage liquidity very well. Agility to handle things very quickly. We are seeing that as more and more people want to do banking on the phone and remotely and really don't want to walk into the branch. But there are times where they need advice for certain type of transactions, certain type of products. You should be able to remotely deliver that level of advice. And therefore, all the themes that I mentioned to you earlier become very, very important. So let me just, sort of end this with a couple of things that we need to keep in mind, because just like all the positive things, we have to pay attention to some of the blind spots that we are seeing. One is, whatever we do, we have to have a clear business outcome, and that business outcome is to actually ensure that the customers are able to get what they want at the right time, right place. Because I don't think very often we embark on digital journeys without a clear business outcome. And guess what? A business outcome is not only about increasing revenues or about increasing customers. If you see what's happened with all the people, as I said earlier, moving online, 39% of the people are reading more online news than ever before. But at the same time, suddenly we are seeing almost 40% drop in print media, and nobody is really bothered for getting, any of the print media to be used anymore. So I think change is going to come to financial services if it's not already come in every market. And it's going to be very rapid, because today the architecture and capability you've seen in my information in 4-5 months, if you have not seen a change in 4-5 months in your financial services, whether it's in the business of liquidity, risk, lending or remote access, then, you sort of, you miss something, because I think everybody has seen it everywhere. And we've got to be prepared for that. And technology and business needs to be closer than ever before. And using data and intelligence is vital. The second thing, I talked about the industrial, digital, and the information age. I think a lot of our problems normally result in the fact that we think digital, but when we go back and operate, everything we do is industrial. The way we go about managing our business is still industrial. How do you create the ability to manage a digital cultural change within your organization so you can implement and not go back and slip back to industrial age thinking? And I think that's a very important piece that one has to keep in mind, because otherwise one can quickly slip back into the industrial age. And finally, I want to add, something that we do very clearly in Intellect is that we believe in the concept of progressive modernization. We do not believe that you can do this as a big bang implementation. You've got to do this slowly and carefully. Today, the platforms are modular. You can start by channels, by products, by segments, whether it's business or individual. You don't need to embark on everything anymore as a big bang, but you have to make that change, and that progressive transformation is going to be a couple of years. So those are a couple of my thoughts. I hope it resonates with you. And if there are any questions, feel free to ask.
You summed it up very well, Manish. Beautifully, you brought the integration between business and technology, and we don't want to have anything other than progressive transformation. And that's what the need of the hour. If I ask you one question, where do you see, how do we harness the digital platform for business growth? Given changes are happening in terms of liquidity, in terms of debt servicing, in terms of credit risk, you said it all.
Yeah.
How do you harness digital platforms? Step one, how do you move?
I think first and most importantly is to have the new application architecture, which is open architected, implemented. You can't, like I said, do everything at one time. You got to decide I want to touch the corporate businesses. I want to touch the small businesses. They're the ones struggling most, where I feel that there is the greatest challenge, that somebody else will come and sort of take that business for you, or you want to go to retail. Now you really have to see the capacity of your organization for change. And you got to say, okay, you know what? I want to architect this in such a way that I can have the right people with the right mindset. Somebody told me earlier that it's tough to get traditional people like us who've been, 30 years in the business to suddenly, change. But guess what? Many of us are changing, because we are changing the way we adopt our life itself in the last few months is proof enough. So I think it's very important for us to be able to bring people with the born on the cloud mindset into the organization. And therefore, all the fintech thing you spoke about, because Qatar is extremely well positioned to do a phenomenal job in making this into a digital center of excellence. And I think the question really is, how do you build the parameters to make this happen? How do you open the market to be able to make this happen? Because I think that financial institutions will quickly catch up. Even in the most staid markets, because of open banking, things have changed so much, because suddenly you're telling the customer that, the data that the bank has is not really owned by the bank, it's owned by the customer, and he has the right to share it with anybody he desires by giving consent. So when the regulator changed that objective, everything changed, and every institution decided that they need to compete, okay? Now, I'm not necessarily believing that digital banks are the only answer to the solution, but I think the focus on information, data, and customer experience is what is important. That is the objective. And how do I get to that objective for which segment, or do I do it all? Depends on the capacity of the organization for change.
Makes sense. Thank you, Bonesh. Perhaps there could be more questions on the Facebook, and we'll get back to you very soon. Next speaker is going to talk about the connected finance. Iyad Badr, Regional Technical Manager, Dell EMC of Partner. Mr. Iyad, over to you.
Good morning. Thank you, Doctor, very much for arranging this session. Thank you, Khaled, as well, for inviting us. I'll be sharing some slides while we discuss Dell's perspective on connected finance or digital finance. Let me just do that real quick. All right. So today we're going to look at the evolution of financial service industry. And I think the previous sessions lead very well into this, the business technologies and how Dell were working with the banks in the region and worldwide to get them to achieve their goals leveraging digital technology. So what are we seeing in the markets, right? So worldwide, McKinsey did a study last year and found 56% of the banks may not be viable. Now, I don't believe this is true for the banks in Qatar, for example, but I do see a lot of findings that we can look at to drive the next actions. So from an investor point of view, we see a huge amount of investment in fintechs. We see the fintechs and big techs like Apple now targeting the key markets we work in. We see that the new companies, the competition to traditional banking, are spending 70% of their budget on innovation because they don't carry the legacy world. They don't have to worry about the branches. They don't have to worry about the same rules and regulations that traditional banks are working with. And we see the customers are looking for a way to say, you know what, I want something tailored for myself. I want to feel like I'm an individual and being addressed individually, not as another number in a bank. And we've seen this churn rate change around the world. And the new users, the new generation, are very comfortable using technology for financial services, where maybe previously they were more hesitant. They wanted to do the paper-based. They wanted to be physically there when they sign documentation. Now, all this leads to a lot of opportunity I see, especially in Doha's market, because it is a smaller market, so we're more agile in being able to address this transformation happening. And if you look at the needs we always look at at Dell, we talk about revenue growth for the banks, we talk about customer experience, cost reduction, and resiliency. And what we've seen is, if you look at the initiatives, I guarantee you that every bank, and especially Doha Bank, who we work very closely with, is looking at these different things, whether it's digital channels, a financial marketplace, better risk management, modern branches. Previous session we saw was talking about maybe the branches need to shrink the numbers, maybe become smart branches, maybe have more small branches where people can do the majority of their transactions digitally as well. And then, of course, what technologies to leverage? We've talked about open applications. We've talked about cloud native applications. Open banking, I think, will unlock a lot of value to be able to drive partnerships with the fintechs. If you see what's going on around the world with all these fintechs, they have the innovation, they may have the agility, but they don't have the customer base, they don't have the trust that a bank like Doha Bank has. So what we try to do is we try to link up the needs, the initiatives, and technologies to have banks able to drive their agendas further. And when we talk about this, we try to split up into 4 sections around digital, IT, workforce, and security transformation. And today I'll talk mainly about digital transformation because, I mean, we would need a few hours to go through the whole view of the way we look at things in the banking sector. But the idea around digital transformation is how do I modernize applications and data analytics? What we've seen, and Gartner's done a lot of research around this, is we're moving from a buy model to a build model. Traditionally, what I've seen in banks is we acquire and customize software versus building our own software, which takes longer, and the cycle to purchase and customize is a months long, if not years long cycle. What we're seeing is more and more customers are looking for a way to drive the application development or the products, the new products to market in 30 days. So we worked, for example, Liberty Mutual Insurance is a good example in the United States. They used to take 6 to 8 months from coming up with the idea to getting it to market. What we've been able to do by developing agile methodologies, by leveraging lean product management, agile development, and making a user-centered design is focus on minimum viable product instead of the big bang approach we used to always do. Get the product to market in the shortest time possible. In this case, they aim for 28 days. Follow up with many, many updates based on the roadmap we've built, based on customer feedback we've seen. And the results for Liberty Mutual, for example, is a 2-digit growth year on year on motorcycle insurance with 0 investment in advertisement. So if you take this concept and start to apply it to different campaigns we would want to run at a bank like Doha Bank, for example. I want to run a campaign for the month of Ramadan. I want to be able to come up with the idea of the campaign, get it developed as an application or as a new module to the end user application, and have it in market for 28 days, and it will live for 28 days. I don't want to spend 6 months developing an application that has a lifespan of 28 days. Or the different options, people who want to get the latest technology from a Samsung or an Apple or a mobile provider. The bank, if you look into, and we'll talk about this in the big data piece, if you look at banks have everyone's information. If I'm able to drive the product to the customer by saying, listen, we know you're a Galaxy user, we know you're an Apple user, the new iPhone is out, here's a promotion, 3 months interest-free credit to acquire the phone on launch day. This will drive better customer interactions and make the customer feel he's getting a customized offering. Now, the most significant piece we've seen is the legacy application modernization, which has the biggest impact, which is also the most complex piece to start changing, because new applications, you can start with the cloud native piece, you can leverage fintechs, have them connect into your world. But what about our old legacy systems, which are generally siloed, which are less efficient maybe, versus what the fintechs are able to do? And what we need to look at is how do I start modernizing my services so my cost to income gets below 25%, my cost to asset below 50%. I want to reduce my marginal costs to a point where it's near 0. And we worked on these same concepts with Citibank, DBS, MasterCard, etc., to help them build an agile application modernization service to improve stability, able to scale dynamically at any point in time, improve speed, improve performance, and obviously have the security on the back end to make sure that there's everything is done in a secure way to maintain the reputation of the banks. Now, how we do this, and I'll just talk about this briefly, is we've built a portfolio of products using VMware's Tanzu platform, where you can build all the new applications and you can run this anywhere. We always talk about the cloud. Should I leverage public cloud, private cloud? Is it AWS, Google, or Azure the best? Is that we talk to our customers about saying, listen, The idea is to leverage the best cloud provider that's available, whether it's in-house or Azure or AWS or Google. What you want to do is deploy the tools on the platform that makes the most sense for your customers, for the best cost, best performance, best security. And you want to be able to seamlessly move this around as required, depending on the use case, depending on what's happening today. This concept of interconnected apps is how can I start changing the way the bank talks to the outside world. Traditionally, being safe meant being locked off behind a firewall, having a very secure application, access controls. Today's world, when you want to partner with a fintech, or when you merge with another bank, which is in country, in Qatar or outside, how can I leverage the two banks I may have as part of this group? Or how do I leverage a fintech that may not necessarily be connected into my core banking application? And the whole concept of this, and we discussed this in previous sessions today, is how do I build an open bank or an open banking API so that I can interact with the different providers to give my customers a better overall experience. If you see this very interesting company in the UK called Moneybox, and what they do is every time you spend with your mobile device, with your credit card on your mobile device, if you spend £1.50, it rounds it up to £2, takes the 50 pence and puts it in your savings account and invests that money for you. And obviously, to get this to work in a bank like Doha Bank, we'd need an open banking API to be able to have our customers easily access this technology. So this is just one example of connecting with the newer users, the tech-savvy users who, the newest generation, that's what they look at. They're looking for ways to interact with the bank directly without intermediary steps. And open APIs, leveraging fintechs, lets you do that quite easily. And we've been working with a few banks on this. And one of the ways we've done this is one of the Dell Technologies companies is called Boomi, and they're all about integration. When you meet anyone from Boomi, they talk about integration and only integration. So they focus on building APIs with you and leveraging open banking, for example. They integrate legacy in the fintech world. They have master data management solutions, and they help you build business-to-business exchange platforms so you can speed up invoicing and simplify invoicing and payments, because this is a big area where the legacy world gets stuck in, is how can I speed up payments so that my suppliers are paid faster so they can continue interacting with me and driving value. And we've done this with a few banks and telcos and government agencies around the world where we integrate different platforms so that they're able to work together faster and seamlessly. Now, when we talk about data analytics, traditionally we talk about reporting, we talk about BI, and that will always be part of any institution, especially in banking. But how can I start leveraging AI, machine learning, deep learning for fraud detection, for real-time analytics, for recommendation engines, risk modeling, etc. And what we see is people or organizations are able to leverage the newer technologies around analytics and AI, are seeing customers spend more money with them, making decisions faster and reducing their cost through AI-driven automation. And one great example I've seen, and I thought this would be interesting to discuss, is this is a UK bank where when we worked with them to build this big data analytics platform, they were able to lend to 77% of customers who were written off because of the current credit score without increasing risk, or default rate if you want to call it that. Imagine the amount of money you're able to generate and how much more valuable you are to your customers even if their current credit score is not the best, you're still able to lend them money, maybe even at a higher rate, but without increasing your default rate. That would be a huge benefit to the bank, huge benefit to your customers, and it will drive a positive interaction because those consumers would say, you know what, I would normally be rejected and I needed to access these credit facilities, and Doha Bank, for example, was able to do this for me. Another example recently we've implemented in the past 12 months in the region is around ATM management. So while it's a simple, the concept is simple, is how do I manage cash management in ATMs and branch? Because you have to have it populated to be able to produce the right amount of money depending on demand. And normally these ATMs and branches carry more cash than they may consume, or they may not have enough cash. So what we've done using big data analytics, we're predicting cash demand accurately at ATMs and at branches. And the impact of this bank in the region was that they reduced cash deposits by $300 million, took that money, were able to lend it out at 3% or 3.5% or 3.25% annual rates. And they were able to take something that was a pure cost into generating new business for the bank. So that was seen as a huge value play. And to be honest, it was one of the simpler solutions we've implemented in terms of leveraging big data analytics with a very fast time to recovering the investment and seeing value out of that investment. So this was a big win at this bank. And now we're seeing many banks start adopt this methodology in Qatar. Now, what are the challenges we see in analytics? And to be honest, I've seen these challenges in big data, in analytics for years now, is around skills, around getting access to data, around budgets. Results are too slow. The data scientist wants to just work on his piece, not worry about the infrastructure. I've seen many projects that I've been a part of where the infrastructure was too slow. And then we have data engineers who don't have the experience to build these complex stacks, because especially in the open world, you have to build everything yourself. So what we've done at Dell to speed this up, to simplify everything, leveraging open source tools, leveraging Intel, NVIDIA, Cloudera, Splunk, Hortonworks, Spark, we've built what we call ready bundles for advanced data analytics. What we're trying to do is accelerate the time from saying, you know what, we're going down the data analytics path. We don't want to fail. We want to make sure we have the right platform and the right tools available to our data scientists, our developers, our data engineers, and our analysts. And we want to be able to go to market fast with this. And so what we've done is we've built ready stacks that we just announced a few months ago, so that our customers are able to start seeing value out of those investments. So we quickly discussed a few points around Dell Technologies, especially around digital, but of course there's other aspects we could look at. And that's essentially what we have for today. I'll stop sharing the screen. And I don't know if anyone has any questions or comments. I'll be happy to address those.
You summed it up well, Mr. Yad. Tell me, in terms of financial service, you gave so many vital examples. Now, which part of the business model? I mean, we have wholesale, retail, transaction-based processing are all happening through retail. Treasury investments, you showed an example of liquidity and cash management, how it can be improvised. And again, international operations. So where do you see major connected finance? Okay,
let's say the easiest, what in my mind is the easiest to go after is something like cash management, because it's a very specific use case you can address, and everyone has this use case. If you talk about the huge value play, is I think the open banking API will open up a whole world for banks to be able to leverage the new technologies by creating these open APIs. There is a lot of, I don't want to say complexity, but a lot of processes that we need to change operationally internal to the bank to leverage and get comfortable, especially from a security point of view, that these open APIs don't open us up to risk. Consumer side, I believe following a agile development mode, or building a culture of, let's say, digital banks like we discussed earlier, is there to drive better customer interaction. I think one of the worst things that I've seen over the past 20 years is that our interaction from consumer to bank is still very disjointed. It should be as seamless as everything else we do when it comes to technology. And the Apples of the world have shown people that it's possible. So now the expectation is that we should be able to do it. So I think from a consumer point of view, if you want your customers to be closer, I believe the application piece, the open application development, leveraging the customer mindset to say, what do my customers need today and how do I get it to them faster is key to that aspect.
Interesting. You said it about Apple. Apple Card is a major threat to the fraternity. You know, it comes with no charge, no late fee, no signature. It's extraordinary in terms of value driven from a customer perspective. Good. Let me move on to the next important subject, big data. How do we monetize it? How do we make sure the analytics works? To elucidate further, I have a great pleasure in welcoming Mr. Michael Connington from Oracle, Head of Analytics and Big Data. Over to you, Michael.
Thank you very much, and good morning from Oxford in the UK, and thank you very much for the invitation to join you today. As a head of analytics and big data, you'd expect me to say that there's never been a more important time for analytics and big data, and I think hopefully I can justify that. All of the organizations that we're working with at the moment are facing unprecedented challenges in both the supply side and demand side of their business models. And to a large extent, these challenges were unforeseen. So what we're working with a lot of organizations at the moment is to really help them get insight into how their organizations are performing so that they can actually adapt to the changing environments in which they find themselves. So analytics historically has always been associated with hindsight. So what happened and when did it happen? It's also associated with insight into how did it happen? But increasingly, it's also associated with foresight. Now, more organizations, now particularly in financial services, are finding that they are able to predict events in the future with reasonable accuracy, fairly high levels of accuracy. And this is becoming even more interesting in terms of helping organizations adapt to the changing environment. So a lot of finance directors, CFOs are using machine learning to predict cash flow in the future, and particularly in uncertain times, that's invaluable. We did some work with a large tier 1 bank a couple of years ago around the HR space to see if we could actually predict employee churn. And actually, after about 3 weeks work with that bank, we got the accuracy of the employee churn prediction up to over 93%. So clearly, from a banking point of view, that's very important, very valuable insight to know, which of your staff are potentially at risk of leaving and whether those would be regrettable leavers. So very interesting times at the moment. And all of this analytics and big data is tied into a very fashionable concept at the moment, which is about organizations being data driven. I'd be surprised if you've not heard of this. It's really about how organizations use their data and their analytics to ensure that they are making the best decisions at each point in the value chain. And that's making sure that that insight, that actionable insight, is passed to the humans working in the organization as well as the robots working in the organization. Now, I do have a few slides, so if you bear with me, I'll just share my screen. And we'll take it into, sorry. Okay, so hopefully you can see that. So what do we actually mean by data-driven? If you pick up a magazine, pick up a newspaper, anything related to analytics, you'll hear this term. So just to make sure we have a common understanding of what we mean, what we really mean by data-driven is for an organization or an individual to be compelled by data rather than by intuition, personal preference, or experience. So that's really taking the insights from the data and following what the data is suggesting we should do. And in these times in particular, where people haven't really gone through this kind of a situation with a worldwide pandemic, we don't have a lot of experience or a lot of gut feel that we can actually rely on. Now, we know from research over the last few years that those organizations that are more data-driven outperform those on all the major metrics, whether that's profitability, productivity, margin. So we know that being data-driven is a good thing. Now, Avanade, the SI, last year published some research which suggested that the potential benefits to a data-driven organization compared to one that's not is in the region of 14% increase in annual revenues. And actually, the benefit on the cost side is a potential reduction in operating costs of 13%. So by and large, I think we all agree that being data-driven is a positive thing for our organizations. The challenge, or the slight fly in the ointment that we have, is that whenever we talk to CEOs, and there's been several research studies done in the last 12 months with CEOs about how do you actually value the data in your organizations, and more importantly, how do you understand what data sets within your organization is actually underpinning the value of your organization. Now, there was some research that Oracle commissioned fairly recently across 500 CEOs. And actually only 7% of those CEOs said that they could, with reasonable confidence, put a financial value on the data in their organizations. Now, if you sign up to the premise that being data-driven is a good thing, then clearly that's a challenge if we're struggling as organizations to actually understand what data we have and how that data is actually underpinning the value within our organizations. Now, I also wanted to share with you a case study of an organization that is very data-driven. Now, it's a slightly unusual one. I knew that we'd be talking a lot about financial services today, so I've taken a customer from a different sector, one from sports. And this customer is a new organization that was set up 2 years ago called SailGP. And it's a competition, a national competition with racing yachts. And let me share with you this slide or presentation video, short video, to tell you a little bit about what SailGP is, so you get a flavor for it. Now, hopefully that gives you a feel for the excitement of SailGP. We'll give you a little bit more detail about SailGP. So these are the fastest sail yachts in the world. They typically go over speeds of 50 knots. There are 8 national teams competing as part of this competition. The prize money is $1 million, although I think for most of them it's all about bragging rights. Interestingly, all of the boats are identical. So unlike Formula One, there is no advantage in terms of the technology or the design of the boat. They all race identical boats. And all of the data scientists, each of these teams have a team of data scientists and business analysts working with their sailing teams on the boats. And all of the teams see all of the data. So actually, a lot of the competition comes down to the strength of the crew and the strength of the data scientists supporting the crew. Now, the sailors on these boats are amongst the best sailors in the world. So you'll find a lot of Olympic gold medalists. You'll find a lot of America's Cup yachtsmen. But even so, each of the yachtsmen have got devices on them which actually feeds data straight from the boat to them so that they can make better informed decisions. Now, typically, the reason why these organizations are so data-driven is that it takes about 1.5 seconds or slightly less than 1.5 seconds from the point at which the data is generated for it to be made available to the different analysts, to the yachtsmen, to the management teams of the boat, so that they can actually act on that data. And it's actually that speed to insight which makes the difference between potential success and failure. Now, if we hypothetically were to delay the access to that data for some of the boats, it would almost certainly result in them not being able to compete effectively with the other boats. So that's a little bit about SailGP. Now, typically, SailGP use a platform that we provide, and this is a platform that will be similar to those used by a lot of organizations. So HSBC uses platform, Lloyd's Banking Group, Santander, and the core elements of the platform in terms of how it actually delivers insight are that This platform is designed to support all use cases and all applications. So it's designed to unify your applications data regardless of where those applications come from. Now, also the important thing is that it absorbs any data that you need that has any inherent value to your organization. So it's what we would describe as multi-model. So in the case of SailGP, they have video data coming off the boats, they have audio data coming off the boats, they have sensor data coming off the boats, they also have sensors on the yachtsman as well. And that's all being streamed into the platform and made available for analytics and insight. Now, we also have with SailGP multiple different users. So we have data science teams that are supporting the crews, but also we have fans. And we've created with SailGP a fan app. And we need to provide that data to the fans in a way that they want to consume it. So another key aspect of this platform is that it presents the data to people in the way that they want to consume the data. So data scientists will consume the data in a completely different way to a business analyst or to a C-level executive. And that's another important element of the platform. Clearly, there needs to be good security and good governance of the platform, but ultimately what we're looking to do is to unify the data, provide the analytics and the insight, and also to support the data science activities, which are becoming increasingly important for a lot of organizations, particularly within financial services. But why is it important to have a platform? We're finding that predictive analytics is becoming much more of a reality now. In the market, we've been discussing this for probably over 10 years now. And certainly 10 years ago, it wasn't really something that any organization could do reliably well. That's now changing. And as we get predictive analytics much more online, it's down to really not whether you can actually predict outcomes in the future, but also how quickly you can do it. So that's why having a platform is important. And if you look at some of the key disruptors in different markets, all of these organizations use a platform approach to data management and analytics. Classic example that I would suggest is if you look at Diners Club are largely credited with creating the idea of the credit card. Now, if you look at their market share at the moment, last time I looked, it was about 1% of the global market. Now, if you look at people like Visa, MasterCard, and you look at their market shares, they're vastly larger. So why is that? And I would suggest that primary reason for the difference is that Visa and MasterCard have actually built more effective and more performant platforms with which to serve their markets. If you also look at the often referred to digital disruptors of Uber within the taxi business, their platform is phenomenally powerful. The pricing algorithm at the heart of the platform is absolutely amazing. It's monitoring 24/7 every taxi journey made, every Uber car in every city around the world, and it's actually pricing each ride individually based on the time of day, availability of cars, and things like that in order to maximize profitability. Also, if you're streaming data, you're likely to use somebody like Netflix. And gone are the days where the movie studio execs would be sweating as to whether they would be able to recoup their tens of millions of dollars for the latest movie. Netflix's customer analytics is so sophisticated that they can commission and create content with a fairly high degree of certainty that they will recoup their costs and make significant improvements over and above that. And these sorts of platforms, as I said earlier, need to support all use cases and all applications. So whether it's HR analytics, whether it's finance analytics, whether it's customer analytics, whether you're trying to do credit scoring, whether you're doing anti-money laundering, the ability to combine your data sources to get new insights, to actually help drive new revenue streams, new products and services, or whether it's to try and drive operational efficiency, that's the reason why the platforms are so important. And a good example of one of our customers in Spain, CaixaBank, created one of these platforms. The CEO and the chief data officer did this about 7 years ago. And in the first 2 years, they were running over 100 new use cases on the platform from fairly diverse use cases, including customer analytics, where by using the platform, they increased their sales revenues by 50%. by having better analytics into their customer behavior and better targeting. They also were able to deal with the European Central Bank liquidity testing far more effectively and far more quickly than they would have been able to do previously. And then there's a whole gamut of use cases in between, including actually helping to foster innovation within the bank in order to encourage their staff to be more innovative and to think about new ways of actually serving their clients. Now, to take a slightly more deep dive into the analytics side of things, it's quite useful to know where in the analytics world you are in terms of your capabilities. Now, 10 years ago, analytics was focused on having centralized analytics, and this was great for delivering strong governance, having a single source of the truth. It's typically a centralized function. And the problem with that was that it became quite unresponsive to the needs of the business. Probably 5-6 years ago, it moved to a self-service approach where customers, individual employees were able to go in and actually do their own visualizations, mash up their data, create their own analytics reports. This was much more agile, but the problem is it then started to break down the single source of truth, started to duplicate data, started to result in different parts of a bank using multiple different tools that weren't compatible. And then now we're entering into the third stage here, which is the augmented analytics stage, where we're using machine learning within the analytics in order to assist employees with things like data integration, mashing up data, enriching the data, natural language generation, so that as you add things to your canvas, the machine learning is actually writing the report for you. I have to say, I would have been very happy a few years ago to have everybody having machine learning writing all my reports for me, but we are in a world now where the machine learning is sophisticated enough to start doing that proactively and to actually save us time. And it's also helping with collaborating across the business as well, so that you can share the insights that you're actually gleaning and actually get colleagues to comment on that, or build on that, or elaborate on that. I'm also delighted to say that from an Oracle point of view, we've simplified our offerings in this space. So we now have a single analytics solution for cloud and a single analytics solution for on-premise, which delivers all of this. So you don't actually need to decide where you are and what you want. It's all there within one platform. Now, the key thing for you, I guess, when you're looking at your analytics capabilities is to try and understand where you are on the scale here. If you can't do enterprise reporting accurately at the moment, and you'd be surprised how many organizations are there, then that might be an area to focus on and to prioritize. If you are doing all of that and it's all effective and you've got self-service, then moving into the augmented space probably makes a lot of sense for you. Just a few recommendations that we've gleaned from customers in terms of approaching becoming more data-driven and leveraging analytics. Firstly, it's always valuable to assess your digital technology utilization. There are a number of ways you can do this. One test that I find quite useful is what we refer to as data liquidity. Now, data liquidity is how quickly an organization can take a major new data set and integrate it, process it, and derive insights that can be then applied to a business process, either by a human or by a robot. We also look at the cost of doing that as well. So ideally, it needs to be fast, it needs to be slick, and it needs to be cheap in terms of onboarding new data, getting the insight, and actually getting it to the people in a timely way that they can actually use it to make better decisions. Secondly, this one's often overlooked, is that quite often organizations are not culturally tuned in to thinking in a data-driven way. A lot of staff, particularly the older staff like me, aren't necessarily thinking about how they can use analytics, how they can use insight, how they can use machine learning to do their jobs better. So it's always useful to look at the skills base within the wider population, but also the talent and the skills available within your IT and analytics teams as well, to really make the most of analytics and data management. Really important to get a sense of priorities within the bank, within the financial services organization, or within whichever organization you're working in. And it's really important. I think one of the previous speakers said earlier that having IT and business engage closely together is extremely important. Absolutely fundamental that the business and IT are working in terms of identifying the top priorities for the organization that you're working on. And then start building the house of data, start bringing in your data sets. So for example, with HSBC, we've been working with them on improving their financial analytics. So as you imagine, for a large bank, they've got many different finance related data sources. Challenge for them was that to provide certified reporting to the executive management team, it was taking T plus 21 days to actually get that insight into the hands of the executives. Now we've actually pulled together all those disparate data sources into one place, running the analytics on it. They're at T plus 1 day for certified data. So start building the house of data. It doesn't have to be everything all at once. And once you've prioritized your use cases, then you can quickly identify which data sets are relevant and start moving them into your platform. But also what you'll find is as you progress, you'll have secondary use cases that come up where you need to leverage that data. Obvious area for benefit is combining HR and finance data, which again doesn't always happen in all organizations. And piece of feedback that all of our customers tend to recommend is just get started with an analytics use case, start building it out, learn on the job, work with your stakeholders within the organization because it will evolve. So there is a lot to be said for getting out a good enough analytics capability to the people that are using it and then working with them to evolve that to actually meet their requirements. So it doesn't have to be a big project. You can start quickly, deliver benefits quickly, and we've certainly seen banks get additional insight within a matter of weeks rather than months or even years. So that's me done. Thank you very much for your time and for listening. And if you would like to have any further discussions on how to become more data driven, then we would be delighted obviously to have those conversations with you. And please feel free to drop me an email or ping me on LinkedIn. Thank you very much for listening.
Thank you. Brilliant presentation, Mike. It was so informative. The 5 steps that you summarized it is quite useful. I'm one of the 7%, within the 7% I stand. I understand definitely big data can be a great tool for us to generate revenue. Now, how is it in terms of Gulf banks and Gulf financial service? How is getting evolved in the Gulf states? From your perspective?
Yes. So we have very good relationships with quite a few banks within the Gulf states. One that I'm familiar with is First Gulf Bank. We've been working with First Gulf Bank to basically help them build an early warning system to look for changes in interest rates and additional challenges within liquidity risk. The initial benefits of the project were $5.5 million in terms of cost reductions. So we do enjoy good relations with Middle East customers. And actually what's nice to see is that a lot of our Middle East customers are some of the more innovative ones as well. So it's definitely innovation's alive and well, definitely in the Middle East and the Gulf.
Many questions for you. I'll send you the questions separately. For want of time, I have to move on to the next speaker. Let me move on to the local administrator here, telecom company, Ooredoo. And Cyril Anand is a director, building business process with customer care center. Let me listen to him, what exactly he has got in store. Cyril.
Thank you, Dr. Sitharaman and Doha Bank team for organizing this and inviting us over for this discussion. It's a pleasure to be here. Let me quickly share my screen. I know it's at the end of 1 hour or 45 minutes, so I'm sure quite a few people are experiencing digital fatigue with this webinar. I'll try and keep it short and simple, but dive into the most important aspect of customer centricity. Right? So what is the need and why do we need to build our capabilities to cope with this exponential change? I think the most important thing that we need to understand is the customer is the reason for our existence. Because we have a customer who pays for us, businesses exist. And it is a prerogative of the business to delight this customer so that you stay in business. So addressing on this aspect of how do you, in this digitally divergent world, how do you manage to keep that customer in the center of all your business processes, and how do you delight that customer? And I think this one image kind of explains the challenge that the digital divergence poses us. As a telecom operator, we have customers ranging from under 7, especially in the post-COVID, where you have a lot of e-learning and online learning happening, to people who are above 70. So we have customers across these generations, and we need to cater to these customers. And the beauty is, each of these customers in the digital platform have their own preferences. You talk about Generation Alpha, the newly coined generation, and Generation Z. You have YouTube and Insta and Snapchat as their preferred platform on which they collaborate, they experience content. You move to Generation Y, which is more on Facebook, Twitter, and Pinterest. Moving on to Gen X, the generation which started blogging as well. And the baby boomers, more on Facebook and YouTube, perhaps. So there itself posed the challenge. Even within the digital platforms, you have so much of divergence of platforms that we need to engage with our customers and keep them at the center of the experience. Just like one of the aspects of the 5 themes that Mr. Banesh spoke about, the customer experience that we talk about on a digital platform. And how do you basically make sure that you are able to cater to them? And it's not just digital. We also got to look at, we have some customers, again, from our good old days of when we were as QTEL, where you had a telephone directory. How many people would even remember that? That people used to come and collect these directories from the Orido shops and use that to basically locate people's telephone numbers. Moving on to other means of a call center based interface that we have with our customers for various services, and now the digital interface that we have. So we as a telecom company have evolved and have done that at the forefront of this, irrespective of what is the base of the customer that we are talking about. And I have 2 case studies, which I'll talk to you about, as to how we put the customer at the center of developing those products and the business processes to support those products. And this is again a familiar figure of we evolving from retail to a voice-based to purely a digital play that we have got ourselves into, catering to this spectrum of generations that use our services today. So there's been a tectonic shift in how we have approached this. Rather than building to last, which was our forte. So when we built our networks, when we built our products, the robustness of the product was critical to building to adapt ourselves, to be agile, to listening to our customers and being able to cater to each and every generation of our customers that we cater to. Getting into digital play, and this is the example, the case study that I would like to share as to how we went about catering to that one particular segment of our customers who are those digitally savvy customers. I'm not sure how many of you would have used this, but this is a service, an eSIM service that's available on the Orido app. So you no longer have to go and buy a physical SIM. You can actually download an eSIM from the app. So you can buy a SIM card and activate your telecom service from the comfort of anywhere. And not only that, we also talk about swapping from a physical SIM to an eSIM that can also happen digitally. Now, people might be wondering, okay, how many customers really use this feature? So gone are those days when products were developed basis the size of your customer base. even if it is a small base of customers who today have eSIM enabled phones and who really look for swapping their physical SIM to an eSIM, we have these features ready for those segment of customers, thereby truly putting the customer at the center of it and ensuring that we understand their customer journey and enhance their digital experience. So that's one purely from a product point of view of how Ooredoo has been able to be at the forefront of enhancing that digital experience and providing these digital services through pure digital play. Coming to another case study, an example, which we are really proud of, Wheel the World project. And this is related to the 2022, this is related to the fan experience. So here we are starting to wear the hat of the country, Qatar, and the Supreme Committee. How can we make sure that the fan, who's the customer of the country, who's the customer of the 2022 experience, is inclusive, especially the differently abled fans? And there came in our problem statement. Do we have something around accessibility? How can we make this World Cup the most accessible, inclusive World Cup? And that was the challenge posed to us when we started working with Supreme Committee. And there we started our journey with our ecosystem of digital partners, where we were able to bring plug and play and our customer and organize the design sprint sessions where we would be able to address this challenge of making this World Cup an accessible World Cup like no other World Cup in the past. And within a matter of 6 months, we were able to develop a product with the help of Supreme Committee, which would be used in the World Cup 2022 for providing this inclusive experience to the differently abled fans who will be able to experience the World Cup for the first ever time. And these were the 4 products that we were able to develop out of the design sprint sessions with a pre-trip assistant and a connected wheelchair that would enhance that experience. Once again, putting the customer who's a fan of the country, who's a fan of the World Cup, who's going to come to the country, and thereby using digital to make sure that we make the universe revolve around our customers. So these were 2 quick examples and something as a challenge that we have had and something that we are proud of solving this problem. So Wheel the World for Qatar by Ooredoo. So sticking to my promise of keeping it short and sweet, thank you very much for giving us this opportunity and sharing what we have done in the world of customer centricity as Ooredoo.
Thank you, Siri. It was quite short, but you did well. You did well, and you gave a good essence of the overall value creation. Now, tell me, in the last 6 months, as a local telecom, a major operator and the regional operator, and what are the changing behavior you're seeing distinctly, which we should know?
Of course, the most obvious one is the consumption of digital has increased manifold. That's something that we have seen. But what we have also seen is the asymmetric switch of networks. So typically, a telecom product or telecom services are consumed in a particular manner. So you look at the business districts, they have a certain pattern of consuming telecom services. You have the residential districts have a certain pattern of consuming services. And with this pandemic and with the work from home starting, we had a complete shift. We had the residential districts having to operate like business districts, and the business districts traffic actually fell down. So dynamically allocating resources on the network, and that's where big data and software defined networks really come into play. How do you dynamically allocate resources basis the shift in consumption pattern of our customers that happen? Video content shoot through the roof. If you look at the online consumption, especially for education and also for healthcare, with telemedicine and video consultations happening, we saw thousands of percentage of increase. And that's something that the network had to dynamically cope. And in the last 6 months, you would have not seen of people complaining, which would have not been the case perhaps 3 or 4 years back. Had we been on 3G networks, we would have still struggled. But having 4G and 5G networks, I think investing in the technology and making sure that we were there, we were one of those smoothest operators in the world, I would say, who were able to transition from a different pattern of network consumption to completely a different pattern, which even from a disaster recovery and a business continuity point of view, we have never tested this. So we had to get into this live and do it, as they say, we were fixing the bike as we were riding the bike, and we did that seamlessly. So that's something that I could share as an insight from an Ooredoo standpoint.
Exciting stuff. Thank you, Cyril. Let me move on to the next speaker. In fact, you set an invitation for the next speaker. Building agility to your workplace. We are not location-centric anymore. It's going to be interesting to see what Mr. Shaheen Baloch is in store, partner technology practice, Ernst & Young.
Thank you very much, Dr. Caesar Rahman, and thank you so much for this opportunity. I think it's an exciting platform to be here and amongst so many industry leaders and technology leaders as well. What I would like to do is just briefly go through our presentation. If you just bear with me. Right, so today what we're going to cover, hopefully in the next 15 minutes, again, conscious that we don't have a lot of time left. Initially, we're going to just give an overview of the changing financial landscape and some of the key areas we should be considering as we go through the current disruption that we're seeing and we build for the future. I'll then spend some time walking through and discussing the power of our ecosystem partners and technology vendors and how banks should really be leveraging those to drive exponential change. And finally, I'll discuss some points around adaptive transformation. How do we become agile as businesses? And what are the key success criteria to achieve that? Now, before I move on, I'd like to introduce my colleague, Paul Sommeren, and he'll be walking you through some of the key shifts that we're seeing in the industry today.
Welcome, Paul.
Thank you very much. Thanks, Shaz. Hi to everyone on Zoom and Facebook. Actually, this is true digital divergence happening in real time. So who would think that we'll be doing a digital conference through Zoom 6-8 months ago? It's amazing how things have changed. I want to cover a couple of things around digital and digital acceleration, and also the impact of COVID. So I think COVID, amongst the many negative things that's happened with COVID, I suppose the only positive thing that's happened with COVID is we've all accelerated our digital journey. I think a lot of people, on Zoom and also Facebook Live would be, looking around digital strategies, 6 months ago that were in the years, maybe, 2 to 3 years in terms of their outlook around their digital journey. I think what's happened with COVID is accelerated digital, and that's actually particularly in financial services, where overnight had to accelerate the digital journey from the branch network to the digital, the mobile, and also the online channel very, very quickly. So I think we've seen the digital acceleration happen, rapidly. Also, remote working. I'm working from home. I've been in consulting 30 years. My wife has probably never seen me as much as she has the last 6 months, particularly remote working. But that's also, had an impact both from an organization perspective. What do people do? How do you stay connected around remote working? What is decision making? Right, decision making is through Zoom, WebEx, Teams, and also how do you connect with customers? Where in the past that you maybe get on a plane or you'd jump in the car and go and visit people. Now, remote working has come business as usual. And then we've also had the uptake of cyber security and also cyber threats. I think most financial institutions have been, in some way, shape or form, have been ramped up their cyber and their technology capabilities to meet the cyber threats. This has been a negative part of of digital acceleration, that we've had actors now taking advantage of it. And then of course cost containment in the world now is that moving towards around containing cost. What do you do with the legacy assets in terms of ATM machines, branches that people aren't using anymore? How do you look at rationalization of people that were primarily customer facing, whether that's loans people, branch people, right? That's been a big impact on digital. And then risk and capital management, non-performing loans, particularly in this region, people leaving the region either for a long period of time or forever. There's how do you maintain your risk and capital management whilst people obviously have no salaries or less salaries. And I think, interesting enough, I think most financial institutions during this time have seen a fairly big outflow of capital to, particularly in the retail side, where people have actually decided to send money back to their own countries to support either other family members or pay off debts in their own home countries. And then stakeholder experience, both internal within your own organization and within your customers. A lot of the information is in real time. So, how do you engage your customers and your employees whilst you don't have, probably in most cases, a lot of the information is new to yourself, and how do you absorb that? And then also, how do you then, do shareholder meetings, board meetings that in the past were done face-to-face. So Shaz, next slide. I think just before I get into this, I think one thing that we've done as EY over the last couple of months, we've gone out to the market and interviewed over 50 different banks across the MENA region, primarily chief digital officers and chief marketing officers. And then probably the next 6 to 8 weeks, a lot of that data will be released. We did ask at least 30 to 40 questions, very comprehensive. But I think what I'm showing you now is a bit of a snapshot, an early snapshot of what we've seen, right? So I think it has changed dramatically. The financial landscape has changed, I would say within not years, but in months and sometimes weeks. But also a number of things that banks were looking to do has been accelerated onto them, right? So you've got commoditization of banking services and also kind of the product offerings. So in the past, banks would have a standard savings, and a loan products. That with the proliferation of digital banks, that will now change, because there will be a different, there'll have to be a different value proposition. So, different products as well. Increasing costs of banking services. This era's, seen that. I think as we've been, probably 95% of transactions now are all on the digital channel. How do you, as I said before, how do you cover the costs of, a branch network that, particularly in this region, branches are still important. And they have to be important because the likes of most central banks still require wet signatures to sign up for products. So, how does that adapt? Obviously, digital age. I think digital in the MENA region is really mobile. The proliferations of smartphones. And then obviously increasing customer demand for services, right? So how do you simplify your value chain? And I would say that digital really is around, how do you get straight through processing? And then moving away from, where before it was all about customer relationship management, now it's about experience management. The people, generation X, Y, Z, and all numbers in between now actually want an experience with their financial institution. How do you give them that experience? How do you move towards real-time offers? Can your architecture in the bank actually support real-time offers? where actually it's around personalization in individual office. You know, the technology sitting behind that obviously needs to support a lot of this initiatives. Moving from products to services, people want a service. They want an end-to-end service. So you may have a savings account with the bank. Your life changes. You've just bought yourself a car, and you've bought yourself a new house or apartment. By the way, I need to have insurance with that. I need to have, maybe take out life insurance. How do you offer that as a service versus separate products? And then digital as primary channel. I think today is this has been forced upon banks that as branches have been mandated to close. How do you then still support your customers? And then a value network, right? So this is the whole ecosystem network that a bank. Does a bank really want to offer all the products? Does it really want to get into, offering life insurance, or does it want to partner with people who can offer life insurance, real-time insurance, and also provide that personal experience? And then obviously just quickly on the side, how does the business respond to that? Is around supporting the agile way of working. And how does it? And then how does technology support the business? I think a number of the speakers have talked about the technology to business, handoff, or the shaking of the hand is very, very important. And then lastly, we're going to talk about this. Shazine's going to talk about this probably a bit more detail, but around the architecture. And when I say architecture, it's both the technology architecture, so moving towards open banking, API-driven architecture, but also the business architecture of a bank. How does it support, the new world of financial services? So over to you, Shaz, and you can take over to the next couple of slides.
Sure. Thank you so much, Paul. I think, as you've heard from Paul, the way the landscape has changed and how we need to respond is very prudent. And by looking at our ecosystem partners and our technology supply, I think we're able to collaborate more effectively, and we're able to respond to the current change. Here you can see the actual premise for your ecosystem as a bank is a lot wider than you think. And developing an ecosystem around your bank helps you take more market compelling offers to your customers. That includes the likes of different sectors. So we're seeing a lot of sector convergence and opportunities on multiple sectors working together, as Paul highlighted earlier on around the personalization agenda. How can you get deeper penetration of wallet, and what are the different services you can provide to create that differentiated experience for your customers? By having an ecosystem, you get different benefits from different market segments. For example, in more affluent and mature markets, it provides a more improved service and customer experience. But what we're seeing in some of the emerging markets where you have underbanked customers, it provides mechanisms to reduce the overall cost of banking. Increasingly, the discussions we're having with our clients today, like Doha Bank and many others, is how do we leverage the power of this ecosystem? Bring in your technology vendors and suppliers, many of whom have spoken today, and also look at other suppliers in the market to really create that powerful drive and change and create improved value for your end customer. And by doing so, the convergence is that you'll be able to respond in a more agile way, and you'll be able to better serve your end customer. So to achieve this, what are the key things you need to be thinking about as an organization? To bring that agility into the bank, you really need to have an adaptive mindset. And by having an adaptive transformation approach, you're able to harness the current disruptions we've all spoken about over the last 2 hours and realize more sustainable outcomes. You can do this in 3 key ways. The first is obviously connecting, not just connecting within the organization, within the bank, but also the ecosystem that we've rightly highlighted and discussed. By maximizing the value of your ecosystem, you're then able to respond to the pace of change a lot quicker. And by virtue of that, you're able to become more agile as a bank. Now, there are key 6 principles I'm going to discuss with you and leave with you today. But before I do that, I think it's important to understand that actually having an adaptive transformation and bringing this agility into the bank, it doesn't happen overnight. It's a journey, and it's a journey you need to understand and map out together. By bringing the multiple disciplines, bringing business and technology together and bringing together those ecosystem partners we've spoken about, you're able to organize your bank in a way for success and to achieve success. Now, the 6 principles I'd like to leave you with today in terms of helping you bring this adaptive transformation mindset and agility in your bank is as follows. The first is having a purpose-led mindset. So by bringing purpose within the organization, it helps bring business and IT together to have that single golden thread to guide design decisions. And by doing so, you're able to have a more experience-centric approach for your customers. And by putting your customer at the heart of everything you do, you're able to have greater agility in the organization. Speed to value focus is also important. By mobilizing a portfolio of initiatives and looking at and focusing on the quick wins and just channeling your investment on the areas that deliver tangible results to your end customer and business, that is the way to prioritize your investments going forward. The fourth is multi-speed. We all know that we've got heritage banks and we've got legacy systems, but we also need to have speed to market and speed of products going to our customers. So understanding those multiple speed and acknowledging those is key. The fifth is all around trust, building trusted relationships within the bank, across business and IT, and ensuring you've got that full brand promises fulfilled, you're able to deliver better results to your end customer. And finally, and most importantly, inclusivity. By bringing together a diverse range of perspectives from business, technology, the vendors you work with, asking the right questions and thinking out of the box in terms of how you can better serve your customers, you're able to solve the most complex business problems and you're able to serve your customers better. So in our view, these are the 6 key principles that we believe not only will enable your organization to be more agile, but will help you have more of an adaptive transformation mindset to respond to the current change we're seeing. I think we've managed to finish our presentation in the 15 minutes. I'll hand it over to Dr. Sitaraman and the wider team if they've got any questions.
Perfect, perfect, Shaheen and Paul. You summed it up very well, the agility. And one question perhaps, there are 3 or 4 questions have come in the Facebook, which we'll pass it on for want of time. I have to ask you only one question. What are the specific changes which we need to incorporate in the, on account of the digital disruption in the workplace?
I think we covered a couple of these, and I'll start with this and Paul can add. I think, when you look at the workplace, as I mentioned earlier, historically, we've seen a lot of our clients and financial institutions operate in silos, business making business decisions, technology making technology decisions. And I think that those silos need to break. By having that customer-centric mindset and approach, and putting customer first, you're able to bring business and technology together, and I think you're able to create that greater agility in the bank and have purpose-driven decisions. So I think by working together and breaking down those silos, you're able to achieve that success and that agility.
Absolutely, absolutely. The convergence between bank, technology and the business is everyone is emphasizing, everything is customer-centric. What a brilliant session we have had today. I learned a lot. I trust thousands of viewers who are cutting across various parts of the world must have had very, intelligent input, I should say. And just before I hand over to Khalid, I want to tell you tomorrow, the second part of the session, webinar, is going to be cybersecurity. That's equally important. It's a relay race like Ernst & Young is starting tomorrow with Mr. Umar Shireen, partner technology practice. And again, we have Sheikh Hamad Abdullah Al Thani, the CEO of Vodafone, is going to join. Lee Fell, a senior executive partner of Gardner, and global account manager Ola Ajwa Gan, financial service industry, Microsoft. Abhi Goswami, my chief risk officer, will be joining, and Ravi Baldav, the manager system engineering, the cyber recovery, Dell Technologies, is also joining. So it's going to be a combination of wonderful speakers again. Tomorrow we'll have most important coverage that is on cybersecurity. Now over to Khalid to say a word of thanks.
Thank you very much, Doctor, and thanks for our valued guests. Actually, they are not guests, they are partners. We have got a typhoon of knowledge that we would like to digest in the coming few days and try to adopt. Thank you very much, Doctor, and thank you for our valued guests for the very valuable information.
Thank you all. Thank you all.
Thanks, everybody.
Thank you.
Thank you all.
It's
Thank you for the
here.
invite.
Thank
It's been
you.
a pleasure.
See you tomorrow. Bye-bye.
You all.